Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, September 9th, 2008. What a monstrous down day today, just coming off of a massive up day yesterday. And as we get into today's video, folks, we're going to also look at not only the market and the technicals and the underlying fundamentals of this market and what's going on, but I also want to focus in on now how things have changed based off today's move. Because in all fairness, you have to look at it as a giant reversal off of yesterday. Now, yesterday we talked about a possible consolidation today. We were wrong, flat out. It was a much bigger than a consolidation small pullback day today, no doubt about that. You got a basic hard sell-off in the market where the Dow dumped 280 points, the Nasdaq was down about 60, and the S&P was down about 43. Now, what caused this, all right? We had anticipated that consolidation small pullback. You got a big pullback in the day, basically eclipsing yesterday's gains. So you wipe out yesterday's gains. Where does this put us on the map of where the market could go? Because we all know there were key breakdown and breakout points that we analyzed in the chart yesterday, and now we have to reanalyze all that because there are key levels that we closed below or above, and we have to see where we are. So that's what we're going to do in today's video. These videos become more and more important because every day so much is changing. This market has become a market of massive moves, all right? You guys have seen it over the last couple weeks. Ever since we came back from that holiday weekend, volume has come back in the market as we had said it would, and the moves have just been ginormous. All right. So when we look at this, we're going to start to look at what's going on out there. What's the underlying basis of the market? What are the technicals telling us? And from that, we'll try and piece together what exactly the market should do over the coming days to weeks. Now, what happened today, folks? Because it was an ugly sell-off. There was no doubt about it. Look at this market on the intraday futures chart. And again, we're looking at the ESU8 contract, September '08 E-minis, S&P 500. And it was just basically from 8 o'clock in the morning, a slow drift down. You had a big dump here at 9:30. Big reversal then to take the market back up, but a lot of resistance up here. You can see all the trend lines right into major trend line resistance. Then another dump out, and this was a hard one. This really started things off right around that 10 o'clock time frame. We always talk in the chat room about key time frames. 10 o'clock's a key reversal time frame. You can late in the day you could have a 3 o'clock or 3:30 reversal as you get short covering or selling, profit taking in the markets. And you can see right here at 10 o'clock, hard sell. A little bit of a bottoming tail, but the bounce was so minor there, so minor. Then another hard sell, you get support right in here, and you can see the support line holds. Another rally, but notice coming right into resistance. That's your sell signal right there off of a double bottom support, right into that sell signal 20 moving average. A sell-off again, consolidation, sell-off, consolidation, sell-off here into the close, and then a basic floating right into that close and a couple ticks after hours there. Now, again, what happened today? Because really, the scheme of the market is financials. Yesterday, the market was led up by that Freddie and Fannie news. Today, led down by Lehman. Now, Lehman got crushed. All right, we're talking about Bear Stearns-type crush here. We're talking about a 50% drop in Lehman today, down $6.33 to $7.79. So almost a 50% decline. I think it's about 43% or 45% in all if you were to exactly do the calculations there. Not exactly dead on sure. But that's what happened today. All of a sudden you have that panic coming in the market again about these financials. Which ones are going to make it? Which ones aren't? Lehman obviously is on the odd man out here as it just got pummeled today. And you can see this chart here. This is the intraday chart, all right? So you're having, this is right here $14-ish, give or take. Today closing at around $7.79. And on the daily chart, you can even look at that. Look at this massive dump. And this is actually the weekly. Let me switch back to the daily. We'll look at the weekly too because the bigger time frames are going to help us identify key patterns. But here's the daily chart. And you can see how it was hovering with a couple moving averages of negative resistance right above here. Here's the 50 moving average. You saw the gap up right into that 50 yesterday in the sell-off. Then today's just debacle on huge volume. 377 million contracts traded today on Lehman. That is amazing, folks. Volume like that is very, very rare to see on a stock, especially of that magnitude. All right, so just keep in mind, you're really in the eye of the storm, and that's what it happens to be. Now, we had seen going back a week or so a possible move up this week. We got it yesterday in the markets. It obviously reversed today. We're right back to square one. We're not going to count this market out quite yet, but you have to be on alert. I mean, just know it, no doubt about it. When you see a reversal like this, especially closing below key levels, and the 1260 level, as soon as we got below that, on the S&P. That was a big signal there, and the market just continued to dump out to around, closing. Let's see what the S&P closed at today on the chart. It looks like around 1224, so it was a very, very hard sell. 1260 break on the S&P was a big, big break, and ultimately that's not a good sign. But again, the key is here, folks, is this market has been a market over the last 2 weeks of major ups and major downs. And I'm going to show you the daily chart of the futures. All right, let's do the SPY, actually. Let's go to the SPY daily, and you can see exactly what we're talking about. All right, starting right here. All right, here's that big gap up day. You have a big gap up here. This is last Tuesday, right after that holiday, and then you sell off to close negative. Major move. You have a pause day consolidation following that, then a huge down day on Thursday, followed by a down move early Friday by a major reversal to the upside. Then come Monday, you see the gap up, and it closed very strong yesterday as the market rallied on the Freddie and Fannie news. Today, a major move down, and again, notice where we closed. I pointed out some key support lines here. Number one was right here, obviously the lower end of that channel that we've been watching forever, it seems at this stage. That was number one support. That was around that 1260 line. That broke. All right, the next support we had talked about was right here. That broke. The next support we talked about was right here, and right now that's where we are. All right, so we're on support in this market in the near term. Does that mean we're going to bounce? Beats me. The way this market's been going, it seems like it's either an up day of 300 on the Dow or 250 on the Dow, or a down day of 250 on the Dow, and it seems like they follow each other, meaning you have one big down day, then one big up day, so who knows, really, at this stage. Obviously, our calculations had shown that yesterday was a rally. We thought we'd get a pause day today and then maybe continued movement up. We did not get that. We got that hard sell-off today down to key support right here on the S&P. Really, the support you're watching on the S&P is 1217. That's the really, really good support that we're seeing in this market, all right? So watch that 1217 level. We're at 1224 right now, so there's a little more possible downside near term, very near term, that we're going to keep an eye on, okay? We'll watch that. Now, there's some couple other keys in this market. We're just going to really focus here on the support levels because, again, I'm not really sure we're going to count this market out yet just because of the volatility. All right, you've seen big up moves, big down moves. Let's see what we get tomorrow. It could be a big up move. It wouldn't be shocking to me to see a big up move tomorrow, or at least an up move or a pause day. All right, so keep that in mind, folks, is that the indicators are kind of showing that wishy-washy nature in this market where it does continue, and we've seen that. Big up days and big down days. This is what we've been getting here. Now, ultimately, it's a negative, and that's what I want to point out here, is that while you could see continued volatility with another up day or another down day here, the key here, folks, is that ultimately the fact that we have broken back below this key 1260 line signals to us that within a week or two you may test the lows, all right? Now, whether or not that's, that's up in the air. We're seeing basically a week from now, or we have a turn date coming up, and we'll release that in the video as it comes up. But the key turn date will be a very, very interesting turn date to see where we are going into that turn date, which direction will be. So really stay tuned. Our turn dates have been almost to the day on, give or take a day at max. All right, and keep that on. I think we hit the last turn day very, very accurately on a dump out in the markets a while back. All right, we're going to have another one coming in about a week or so, and that will signal a possible reversal in trend. Now, I want to really focus on not only on this chart. Obviously, we're noticing the key supports. Resistance to the upside now just become this key resistance. This is really what you're watching for the market. Can it get back above 1260 on the S&P? That's going to be the main key right there in my eyes and in the MoneyStocks.com's eyes. Now, let's take a look at the Nasdaq. The Nasdaq got killed again today, although it was stronger early, but really it came right down to this support. You're right at support again on the Nasdaq. The Nasdaq continues to be the weakest index out there. Even though the rest of the market got killed with it today, the Nasdaq, you can see, just getting hammered as opposed to the SPY, which isn't quite as drastic on the downside as you can see here. What I want to touch on today, though, guys, I want to shift a little perspective to the oil charts, all right? So let's take a quick look at oil and the dollar, because oil got hit today, and we're just about to that 102 level, and oil now, remember back about 6 weeks ago when oil was at 145 to 147 at the highs, and I went out on a limb and said, here, I'm going to take a shot here, guys, and say oil is going to be at 100 by the time the elections come. Well, we're at 102 right now. And it looks very, very likely that we're going to be pretty much there a long time before the elections. One thing I will say, folks, is that the dollar, and by the way, you're looking at the USO daily chart, and you can just see this pummeling. I mean, this is ugly. Well, one thing I will say about the dollar is that it looks like the dollar is coming into resistance, and we may see a pullback on the dollar. If that happens, you may see a bid in commodities. All right. Again, if money flow is coming out of a lot of these bank stocks now and these financials, it's going to look for some place to go. It may be the commodities if the dollar starts to weaken. Now let's look at the UUP. The UUP is the dollar index we follow here just on the charts and in this video. You can see it's had a nice solid run. We're seeing resistance really right up here. You may retest that high somewhere in there, but ultimately it looks like the dollar should be due for a pullback. So keep an eye on that. Look for over the next few days to maybe see a pullback in that dollar. If that dollar does start to pull back, where regardless of storms and whatnot in the Gulf, you could see a bid come in the USO, all right? And that's one thing I do want to point out is that the USO is the oil index, and I'm just talking about the oil index, for instance, but, there's the natural gas, there's coal, and all those others that have just been killed. You're talking about 50% drops on some of these ETFs that represent, alt energy and coal and all that. So keep an eye on that, guys. That's something over the next few days that we're going to start to look really closely in these videos. Take care. Have a wonderful day. Hang on to your hats. We're in the eye of the storm here in this market. Have a wonderful evening. Bye.